Hey, what's up, everybody? How are all my little fashionistas doing there today? You know what? I woke up at 4:30 in the morning, as I always do, and I ran 6.5 miles today. Normally, I wake up at 4:30 in the morning, and I go to the gym to work out. Monday, Tuesday, Wednesday, Thursday. On Friday, I wake up at 4:30 in the morning and I run. On Saturday and Sunday, I wake up at 6, but that's only because the gym opens at 7. So that's what I do. And this month, April, in 26 days, it will be my birthday and I will be 60 years old. And I am very disciplined and I am in very, very good shape. Having said all that, how are my fashionistas doing? The market is a little mixed today. Nasdaq up, and so far as of this video, Dow is down. I was thinking about, first of all, you know how you hear people say, wow, it's the same. What's happening is the same as what happened, at such and such a time in the past. You can fall into a trap for thinking that, sort of history repeats itself in the same exact way. Sometimes it looks exactly the same, but there are subtle, if not big, differences between one time or another. But we can still maybe get some information from past history. Made me think about the stock market peak in 2000. Now, in 2000, the Dow peaked out. And remember, that was the whole run-up. It was the dot-com boom. It was crazy. I mean, people were just, diving into the market. I knew friends personally who had never invested in stocks and then started getting in a big way, putting up money with about as much reflection as they would think, less actually than they would think maybe about buying a $2,000 used car, throwing tons of money into the market. But we know what happened with that. Anyway, the Dow peaked out in January of that year, I believe around 11,722. That was the peak or something like that. The S&P and Nasdaq, they peaked out in March. Then in March, there was a big sell-off, a very sharp sell-off. I remember that very, very clearly to this day. And then the market rebounded pretty much almost all the way back to the highs, I think, into April. And then we went down and subsequently, we went into a bear market and the economy went into recession. Now, I told my story in my last video about the Maria Bartiromo story, and actually that was in 2001, in the summer of 2001, when the market was selling off, and she was interviewing Al Michaels, the famous sportscaster, and he said, "It's easy, you just buy puts, what's the big deal?" Like he discovered some new thing that nobody ever knew about. And Maria, well, people, I guess we just have to go short. And it's like now, like the resignation. Well, people, you just have to go long. Remember, Dennis Gartman, as I said yesterday, investors have no other choice but to be long of, don't forget the of, long of equities. No other choice. Ruled out. Don't even consider anything else. All right, today, what happened today? We got personal income and spending. Personal income, real disposable personal income up 0.2%. I think that was like the best gain in 4 months. However, personal consumption, that was up 0.1%. That was the smallest increase in 6 months. And why is this important? Because personal consumption expenditures, that's the largest component of GDP. For the first 2 months of this quarter, the second quarter of this year, we had, I think, a total January and February increase of 34 billion in personal consumption expenditures. In the first 2 months of the last quarter, the fourth quarter of 2016, the first 2 months, October, November, we had 101 billion. All right, so clearly there's a slowdown going on there, happening there. But it's normal. I mean, back in October, November, leading up to the holiday season, all that shopping. But we know that the economy is slowing down in the first quarter, and it did already slow down in the fourth quarter of last year. I will be looking at bank deposits tonight. Remember, there's cash on the sidelines, cash on the side. Everyone who says that, I am sure they have no idea of how to measure that or how to get any sort of a sense of really how much cash is on the sidelines. It's just another one of these lines that people throw out there thinking that they know what they're talking about. It's cash on the sidelines. It's so much cash. How do you know? You know by looking at bank deposits. At least that's one way to know. And I think that's probably the best way. And you could find that data. See, I give out all the information here. I give out all the information on the weekly, the Fed's H.8 report that comes out every Friday afternoon at around 4 o'clock. H.8 report. Now, the reason I could give that out and the reason I could talk about things like fiscal flows and even give you the numbers is because it won't make any difference to you people who don't have mental game. I could tell you what's going to happen, literally, and you're still not going to make any money because you don't have mental game. So it's as simple as that. So, I will be looking at the cash on the sidelines today because I think really that's what's going on right now. This is just kind of a willy-nilly rush into stocks. People have just bought into the, hey, it's going higher. There's no other way to be than to be Freudian slip, long of, don't forget the of, never forget the of, long of equities, all right? I'll see you guys later. Bye-bye.